When you think about mining, what comes to mind? Maybe a lone prospector with a pickaxe, right? Just hoping to strike it rich. But what if I told you that modern mineral exploration is less about a lucky treasure hunt and way more about a calculated, high-stakes business plan? Let's dig into how that all works. Okay, so this cartoon, it's just a perfect way to start. It absolutely nails that old-school perception of exploration, right? Just one person, a hunch, and a whole lot of confidence. But here's the thing. In today's world, confidence alone isn't going to get you a billion-dollar investment. You need data. Cold, hard data. And really, it all boils down to this simple idea. Modern exploration has completely shifted away from just hopeful guesses. Now it's this rigorous scientific process. It's all about getting answers to some really critical questions before anyone even thinks about committing millions or, let's be real, billions of dollars to a project. So why the big shift from just confidence to all this complex data? Well, it's because of what we can call mining's billion-dollar gamble. These projects today are just massive, with huge risks and investments that can easily spiral into the billions. We're talking about a high-stakes game where your data is literally your most important asset.
So, the entire reason for exploration is to knock down those risks, to shrink all that uncertainty. Just think about the questions you'd have to ask. Is this thing actually going to make any money? What kind of crazy geological surprises are waiting for us a mile underground? Do we even have the tech to pull this off? Is it safe for our workers? And what about the environmental impact? Exploration is all about finding the answers.
To get a handle on all those risks, the whole process really comes down to answering 4 fundamental questions. If you get the answers right, you might just have a viable project on your hands. But if you get them wrong, well, you're looking at a very, very expensive hole in the ground. First up, and it sounds almost too simple, what are we actually looking for? But this is the absolute foundation. Are we on the hunt for copper to go into electronics, or are we looking for lithium for all the EV batteries out there? The answer to that question changes everything. The geology you look for, and, of course, the global market you're trying to sell to. Okay, so second question. Once we know what we're after, we've got to figure out where it might be. And this is where the real detective work kicks in. Geologists use everything you can imagine, from satellite images to tiny soil samples, to narrow down a gigantic search area to just a few promising targets.
All right, so we found a spot that looks promising. Now the third huge question is, how much is actually there? And this isn't just about size, it's about quality. You could have a mountain of low-quality ore that's basically worthless, but a small, concentrated deposit could be an absolute gold mine. It's also about how it's distributed. Is it one giant, easy-to-get chunk, or is it scattered in a million tiny pockets?
And that brings us to the final question. How in the world do we get it out of the ground? This is a massive engineering puzzle. Is the rock around it stable, or is it going to crumble on you? Is the area known for flooding? Answering these questions tells you not just if you can get it, but how difficult and how expensive it's going to be.
Answering those first 4 scientific and technical questions is absolutely crucial. But all of that work, all that data, it all leads to the single most important business question. Even if we know what it is, where it is, and how to get it, is it actually worth doing? This is the point where that incredible geological discovery gets a serious reality check from the business world. The process is called economic evaluation, and it has one single, ruthless purpose: to figure out if this project can actually make a profit. And this is where things get super complex, because there are so many moving parts. You've got the price of the commodity itself, which can swing wildly, as you know. You've got the massive upfront capital cost to build a mine, and then all the daily operating costs to keep it running. And then there's something called the net smelter return. That's the actual cash you get back after the raw ore is processed and all the refining costs are paid for.
So how do all these different numbers and inputs fit together? Well, there's actually a pretty structured path, a kind of evaluation flowchart that takes you all the way from a simple rock in the ground to a final thumbs up or thumbs down on the entire project.
Now, I know this looks a little complicated, but just think of it as the project's roadmap. It all starts at the top with the geology, the ore deposit itself. And from there, every step down adds another layer of business reality: costs, production rates, returns, until you finally get to the destination at the bottom, that final economic indicator that tells you whether to hit the gas or pump the brakes. It's the whole journey from discovery to decision. We can actually simplify that entire roadmap into 4 essential steps. Step 1. Figure out what you found, the grade and tonnage. Step 2. Calculate what it might be worth. Step 3. Estimate what it's going to cost you to get it. And the final, crucial step:
run the numbers to see if what it's worth is actually more than what it costs. It's that simple and that complicated.
And this quote just sums it all up perfectly. Exploration isn't just the first step. It's the foundation for the entire mining industry. If you don't have a solid, data-driven exploration phase, the whole thing, from the digging to the processing to the selling, it's all built on shaky ground.
But here's where it gets really fascinating. Not every group that goes out exploring is doing it for the same reason. Their end goal can be totally different.
Let's break down the different players in this game. First, you've got governments. They explore to basically take an inventory of their country's resources and attract investment. Then you have the juniors. These are smaller, nimble companies whose whole business model is to find a promising deposit and then sell that discovery to a bigger company. And finally, you have the huge mining corporations. They aren't looking to sell a discovery. They're exploring to find the next giant deposit they can operate for decades.
And that really gets us to the core takeaway from all of this. Exploration is this critical bridge connecting two completely different worlds. Finding the minerals, that's all science and geology. But deciding to actually build a mine and dig them up, that is 100% business.
So, the next time you see a headline about some massive new mineral discovery, you'll know to ask a different kind of question. The story isn't just about the cool geology of what's in the ground. The real story is about the economics that will decide if that discovery ever sees the light of day.